Welcome to another edition of Invest or Not to Invest, where we talk about the latest updates and developments of small to mid-cap companies in Canada that you might not want to miss out on. If you're an investor intrigued or infatuated with cannabis-based products, here's one pharmaceutical company in Toronto you can keep a lookout for called Heritage Cannabis, CANN.C. So they're basically a vertical integrated parent company, providing the resources for its daughter companies. Now, if you look at their shares for the past 6 months, you're probably thinking, I'm not too sure. But we all know that the market is always unpredictable, and let's face it, cannabis legalization is going global, with some countries decriminalizing its recreational use, which may just reboost the demand for CBD. Now, as we speak, many businesses are already striving for a stake in the green rush, so why should we keep an eye out for them? Well, Heritage isn't profitable yet, but it is trending in the right direction, and the losses are only 3.5% of its $54 million market cap. Now, these guys already have 5 subsidiaries, pushing their medicinal and recreational products onto shelves, and now they have announced quite recently that they agreed to buy Opticann Inc, which is a Colorado-based oral and topical cannabinoid company. And why have they done that? So they can obtain rights to exclusively sell CBD and CBG products made with the patented VESIsorb drug delivery system. And for those who don't know what that is, well, it's a technology intended to increase the absorption rate of an administered drug. Now, in a nutshell, I'm just going to say what EQUITY.GURU's Lucas Kane said. They're growing their cannabis revenues, shrinking their losses, and have a healthy balance sheet. And now they're opening a pathway to selling oral and topical CBD and CBG products to major US retailers. So the rest is up to you. So next on the list is LastMile Holdings. They're trading under the name MILE.V. Now, they are one of the largest micro-mobility companies in the US, but based in Vancouver. Now, through their subsidiary Gotcha, they provide customer ride-sharing mobility via e-scooters to Trikes. Now, their services currently cover countless locations in the eastern half of the state, and they are gradually popping up on the west coast as they wait the go-ahead on contracted permits pending launch. Now, as of March, they hold more than 70 exclusive partner contracts with universities and mid-sized municipalities. In July, they got the go-ahead to operate in South El Monte, California, Galveston, Texas, and St. Clair Shores, Michigan. Now, you can't deny that COVID hasn't affected revenues in the transportation industry, but these guys seem to have kept the rocking boat a bit stable, generating consistent revenue thanks to the high ridership in key markets such as Memphis, Tennessee, Baton Rouge, Louisiana, and Charleston, South Carolina. So what about their share prices? Well, to be fair, if you look back at when they commenced trading on March the 9th, you notice a plunge, and that's around the time we all witnessed the COVID crash in the market. So the share prices of this expanding entity is quite low at the moment, possibly the result of the COVID conundrum or market sentiment. Now, you can't exactly predict what COVID-19 will do next, but in the midst of a pandemic, they've managed to keep the pendulum going. And as you may already know, for a potential investor, as the saying goes, you should always buy them low and sell them high. Your call. But talking of COVID, we now move on to our final firm of the day, which is XPhyto Therapeutics, XPHY.C. Now, we have already witnessed how a bit of COVID panic pushes those stock numbers to surprising heights. But what would it do to a company that has developed a quick, easy, and affordable test that could detect COVID-19 without having to go through, well, this? Instead of this cringeworthy procedure of digging out mucus from God knows where in your nostrils, carried out by a registered nurse, you could just provide a collection of saliva and throat and nasal swabs and wait for approximately 7 minutes before getting an accurate result. So what is this procedure and how does it work? Well, that's a good question, because XPhyto have announced that its diagnostic partner, 3A Diagnostics, a research-based biotech company based in Germany, have rolled out an RNA lateral flow assay test kit that can help detect COVID-19 in anyone possibly carrying that virus. But what's this RNA lateral flow assay test, you may ask? Well, this basically works like a pregnancy test. So simply put, the test kit should show 1 line for a successful test carried out, but doesn't mean that the testee is carrying any of that nasty coronavirus, and 2 lines for someone who tests positive for COVID-19. So straightforward, easy, and quick, right? Now, XPhyto isn't the only company developing a COVID-19 antigen test, but any entity striving for counter-COVID prevalence draws attention, and drawing attention sometimes draws traffic. So keeping an eye on these guys might be worth the while. Now, going back to those numbers, their stocks may have upside potential, since there haven't been any spikes yet, as it does hover around an average $3 per share price tag, and it's also worth mentioning that XPhyto's market cap currently sits at $165 million. So you could do the math however you want and consider all the influential factors before contemplating on what XPhyto has to offer during a post-COVID era. Well, guys and gals, millennials and madmen, that's it for today. Do leave us comments, concerns, or compliments, and do not forget to push that subscribe button.